what to expect of post-COVID-19 impact on Silicon Valley? Okay, let's talk about that. So again, I'm always going to lead with the economy. Okay, as I said multiple times, the economy is the leading indicator. It's not very clear what is this new normal. Okay, what is this normal we touched before, and when will it resume? This is definitely not clear what's going to happen. And I want to emphasize that I believe. I don't have any crystal ball, okay? I don't want to come as someone who can tell you what the future will be. I don't know, but that is what I believe will happen, okay? Silicon Valley economy will continue to be adversely impacted by the global slowdown, and it's a global slowdown. It's not only US, okay? Resulting in layoffs, furloughs, and pay cuts, both in the innovation industry and more substantially in the support non-essential. And I put it at non-essentials in quotes because police is essential, food is essential, teachers are essential, but these are considered as quote unquote non-essential industry, okay? Silicon Valley economy will most probably recover first in the nation and benefit from reliance on technology in the future. If we can look at the future has a lot of technology, and it's not only web, companies like Facebook and Google and so on. We have the electric cars. We have a lot of biotech companies here. We have a lot of very diverse industries located here. And the reason that they are located here is because we have the capital, we have the brain power, and we have basically the employees and all the infrastructure that allows those industries to flourish in our area, okay? But at the same time, as we touched before, many believe that we are heading to a worse than the financial crisis, recession, depression. Ray Dalio, Nuri, Jeremy, and others that I'm following very closely. And I want to actually emphasize, because I did not have to know until recently what is the difference between a recession and depression. So I want to kind of make sure that we are on the same page. What is the difference between a recession and depression? A recession is a gradual decline. Our economy did not have a gradual decline. We have a dramatic decline, okay? To the economy that occurs over 6 months. No, it happened very, very fast. So this is a recession. So what is a depression? An extended recession, serious decline in the economy. Okay, we had a serious decline, lasts for years. It's not yet. Obviously, it just started. So it does lack the fact that it lasts for years, okay? For depression to be in effect, unemployment rates have to rise above 20%. As of 5/8 this last week, we're at 14.7. So we are not technically in the recession yet. And significant decline in gross domestic income. Yes, we are absolutely severe decline in domestic product, okay? So clearly we see signs of depression, but for that to really become depression, it to be extended for years, and the unemployment level have to reach over 20%. We're not very far from there, but we're not there yet, and hopefully we'll not get there, but we'll see. What to expect on the real estate market? So if we're asking the question of real estate market, there is not a single market, okay? Each segment has its own sub-market. And I'm drawing between 3 markets. One up to $1 million, $1 million to $3 million, and $3 million and above. So in the low-end market, up to $1 million market, mostly in the service economy, tier 2 workforce, tight budget, and limited reserve, okay, will be hit the hardest from contraction in Silicon Valley economy. In the mid-range market, 1 million to 3 market, it actually should have been tier 2 and tier 3 market, not only tier 1. In the mid-range of 1 million to 3 million market, It's mostly in the professional economy, the tier one workforce, high income and broad reserve will be hit the least in contraction of the Silicon Valley economy. It's, in my opinion, will be hit the least of the market. In the high-end market, mostly seen the high-end tier one market, these are basically people who are in those kind of company on the very high kind of director, VP, CEO, and so on, very high level, very high income and broad reserve and stock portfolio, okay? And I do believe that those will be hit, but not as badly as other segment of the market. So we have to look at markets not in a homogeneous way, but we have to look at it in each tier separately, and more specifically in the particular market that you are interested in. So where do I see are the buyer's opportunities? Okay, properties that are long day on the market, okay, that are staying on the market for long term. Properties that TFT is transaction fell through. Basically, those people or homes that went pending, supposedly sold, and the buyers, for whatever reason, changed their mind and the property is back on the market. It's basically translate to motivated sellers, okay? Motivated sellers. Limited opportunities are on properties which are short days on the market, just came on the market. Sellers are very optimistic, okay? They're not really open for negotiation. They are basically believe they're selling a jewel, and there is probably a pent up interest in the property. Good location, good condition. When properties are in this good location, good condition, you're most typically going to attract more competition. And obviously, what is important for you is to focus on the market. Don't be all over the place. Study the areas that you want to focus on. Be comfortable with those areas. Make sure you understand what's happening in the market segment that you are interested in. That leads me to my recommendation for buyers. Okay, buy your Silicon Valley home if your Silicon Valley index, Silicon Valley FA index is in an appreciating trend. Again, the Silicon Valley economy is the most important factor impacting real estate prices. Make sure that before you jump into the market, the trend, the Silicon Valley companies are performing relatively well, and you basically are not kind of trying to catch a falling knife, okay? Your 6 to 18 months point of view of the local economy is relatively positive, okay? Which is basically ties to the previous point, okay? You're really relatively confident with your job. The fact that Silicon Valley economy in general is doing well doesn't mean that your job is secure, okay? Silicon Valley is your home for at least the next 3 to 5 years. You are not here to just flip or buy a house and sell it next year because you think that the appreciation is going to happen. Not clear it's going to happen. Not clear if the people or property is going to lose property. So you have to have at least next 3 to 5 years stay in Silicon Valley, and that is your home. Okay, you have the down payment and the reserve. Okay, down payment and the reserve. Don't over leverage yourself. Okay, you have to make sure that you have enough down payment and reserve for situations that are foreseen. Okay, you can make the monthly payment while maintaining a reasonably quality of life. I do not believe that you should be a slave to your home. You should be able to buy a home and live comfortably and make sure that you can still take your children to movies, park, restaurants every once in a while, go on vacation and live life. You obviously have to balance living the moment and living the future, but don't become a slave to your home. You have researched the target market areas where you are interested. Make sure you know what you're looking for. Make sure you're comfortable with the area you want to go into. And make sure that you identify a realtor you can trust, okay? A lot of I hear many times there are people who compare realtors to a used car salesperson. Yes, there are those people. So make sure you find a realtor you can trust, that they're going to give you the information that you are need to make good decision. The good, the bad, and the ugly. Honest with you, serving your needs. Your priorities is their priorities. They are not running their business based on their need, but based on what you need to know, and making sure that your needs are being addressed, being listened to. That is key. Realtor you trust, okay? Whatever decision you're gonna make, it has consequence, okay? So you have to ask yourself, if you now live in Sunnyvale and you pay somewhere between maybe $5,000 to $6,000 a month on rent, it's going to be about $50,000 to $60,000 a year. If you think that you want to wait 3 to 5 years, it can be $250,000 to $350,000 of guaranteed loss. If you believe that market going to correct over more than 250 to 350, stay. If you don't believe so, jump. If you want to take the chance, consider buying one. But whatever decision you are making, it has consequence. What option makes sense for you and your family? This is your decision. What are you comfortable with? And obviously, buying a home in Silicon Valley is for those who believe in the future, are optimistic about how Silicon Valley gonna turn out. That is a very critical thing. Do you have a positive outlook about Silicon Valley economy, about your job, about living in the area? If you do not, obviously, you shouldn't buy a home in Silicon Valley. Now, my recommendation to seller, sell your Silicon Valley home or rental property if Silicon Valley index is in an appreciating trend and you must sell, okay? Can you wait for shelter in place to be over? Make sure to follow the SIP guidelines, okay? Can you wait a little bit, okay? Find a realtor you can trust, the same story. Make sure you are partnering with people that your best interests are in their heart and they're in their mind, okay? And prep the house to impress and price it attractively. Make sure that you are taking the time to think about the people who are going to buy the house. Clean it, prepare it, market it, and price it in a way that they're going to generate traffic to make to have interest in the property. Okay. Else, if the Silicon Valley is in depreciating trend, okay, and you have time, okay, and you have time, hold for better times or rent the house for at least 2.5 years. And the reason I say why is because there is a law, IRC 121, that will allow you to benefit from up to $500 capital gains if you sell the property within 3 years. So I put 2.5 because the sales cycle might take, the prep and the sales cycle might take about 6 months. So don't wait over 2.5 years before, because you're going to lose your $500,000 capital gain exemption. Okay. Consider also refinancing your home and for lower payment. And if you do need some cash, just refinance it and make sure that you can basically have enough capital to be able to go through this period. So what is the next step? Schedule a follow-up meeting to evaluate your personal situation regarding Silicon Valley real estate or nationwide investment. Again, I want to remind you, we're going to have an investment seminar next Sunday. Please participate in that. If you want to talk to us personally, we can do a Zoom meeting, a follow-up meeting, or a telephone meeting and address your question directly and making sure that we are answering your questions. If you are not already part of the monthly report, basically we will be happy to add you to our mailing, where we're going to update you on a regular basis what's happening in the market, about our seminars, whether it's for investor, buyers, sellers, and so on. And obviously, I want to wish you, you and your family, extended a healthy and happy shelter in place. And thank you very much for your time. We're going to open it up for questions, and I'm going to stick around as long as you want to ask questions. So go ahead and ask any question you want.
It's based on your presentation, it's very clear that this is not a good time for real estate investment, we need to wait and watch what's happening to the market.
Are you talking about investing, or are you talking about investing for rental property, or are you talking about owner occupied?
Rental properties.
Okay, excellent question. We are basically managing right now roughly about 300 homes across the country. Okay, and we are basically, our current investment, we have two investments which are supposed to close in about 10 days or so. And we had two other investments that we were supposed to close about 2 weeks ago. We canceled those investments, and we are right now basically trying to renegotiate the purchase price. I believe that 30 plus millions of people who are losing their job going to have a major impact on the rental market. Okay. Now, I just forwarded to my team an interview with regarding Airbnb owners, and basically how dramatically that impact their market, and how many of those Airbnb owners are basically starting to look to sell their properties before they're being foreclosed. I believe that the 33 million people who currently are benefiting from very lucrative unemployment and the checks that the government provided, they're going to have issues with being able first to purchase and also pay rent. So my recommendation in general is wait. We have not seen enough blood in the street. It's going to take 2 to 3 months before we're going to have to start seeing the blood in the streets. And you're going to start seeing a lot of those developers basically losing their clients who are basically our competition, and they would not be able to pay their lenders and so on. And we're going to see, in my opinion, some similar situation that we have experienced back in financial crisis, where we buying homes at values which are basically the fair market value was substantially below the replacement cost. And we have been buying in the area of Atlanta and Arizona properties that for $120,000, $140,000 that the insurance company forced us to have insurance over $180,000, $200,000 because the cost of replacement was significantly higher than the cost, the fair market value. So the other bottom line answer to you, I believe we should hold, monitor the market, which we do basically, and that's what the kind of services that we provide our client. And basically by monitoring the market, we will basically look for the right time to enter the market and continue buying properties for those properties. In addition to that, so I spoke to my Tennessee property management yesterday. For the month of April, we had a very good rental payment. We are not as optimistic about May payment and June payment, but we'll see what's happening. So not only that I expect that price is going to drop, I also see some risk about getting into the market because renters will not be able to pay their rent as in the past. Hopefully I answer your question.
Thank you for detailed answer.
Next, we have a question from Sylvia. What was the real estate market data for April 2020 in Santa Clara County? What was the % down or up in price?
In April, it's anecdotal data. April was still a month of restrictive shelter-in-place rules, which did not allow a lot of showings and participation and so on. And I cannot tell you in confidence, statistically confident, that we see a trend. But in general, I can tell you we went to 2 transactions in April. Both of them were in the 1.1 million to 1.45 million. And one case we would manage to get the house for about $60,000 below asking price. And the other, we went almost $70,000 over asking price. So there isn't yet a good indication. I hear from our colleagues that they are experiencing similar thing, but it's very much anecdotal. We don't have yet a firm, and even in the April sales, these are sales that happened a month before. In the April sales, in the April close, properties that close in the months of April, these are sales that happened 30 days before. Sales that happen during the months of April, we're going to see the numbers in mid-May to late May. Next.
There is also a follow-up from Sylvia. What about the next 6 months? Is there an approximation of any expectations?
Again, follow the economy. That's my only advice I can give you. If we're going to see major layoffs taking place in Silicon Valley, we're going to see an impact on the real estate market. So follow the trend of what's happening with those large companies. I definitely believe that the startup companies were going to be hit hard, and we already see that. But the big question is, what will do the big companies, the publicly traded companies, the top 20 companies, headquarters in Silicon Valley, as well as companies like Microsoft, Amazon, and Samsung and others, which are not necessarily headquarters in Silicon Valley, but have a strong employment footprint locally.
I have a question. Question around the folks who are actually buying the house for the first time, for the new buyers. The people who are actually staying on rent, we have seen a trend actually go down. The rents are going down. I would recommend for folks to just stay on rent, especially who are paying lesser rents right now, and just wait it out and then see how the market is behaving before they go and buy a home.
Is this a question or a statement?
It's a question.
Well, obviously, I think you have, I agree with you that the rental market, which was crazy in Silicon Valley, and I can show you a stat that people would pay particularly in some of those new development, they would pay for one bedroom like $3,000, $4,000 a month, which is a crazy numbers. So I hope that the rental market will go down in terms, and if you don't have, yes, if it's actually the prices of rent going down here locally, you have less of a pressure maybe to look for a house. But also, if you are, go back to my recommendation. If you're planning to stay in Silicon Valley for the long term, you have the capital, you have securing a job, and so on, it might be also a buying opportunity as well. It's the fact that renting going down maybe takes a little bit away from the pressure, gives you a little bit more time, but don't miss that opportunity. I've seen enough people who basically were waiting for years and lost the opportunity. You cannot pick the bottom, you cannot pick the top. Make sure that you make a decision when you find something you like, okay? And you can basically, if you follow the recommendation that I put down there, and you're comfortable in your job, you are not becoming a slave to it, and you stay in Silicon Valley, and you cannot optimize it, because if you're going to buy for the long term, I don't know of anyone in Silicon Valley, to the best of my honest knowledge, that ever lost money in real estate. And if there are probably very few, and it depends on the timing of when they bought and when to sell. Must sell, okay? Even if you're leaving Silicon Valley, you always can continue renting the house and wait for a better time if that's not a great time to sell right now. Next question.
Hi, question from Chris.
Go ahead.
Yeah, hi. Do you expect in the aftermath of Corona that the federal rate decisions might add new benefits for first-time buyers, some exclusions or some sort of stimulus that might lower rates or provide some incentive for buyers?
The answer is I don't know, but what you are actually asking is something during the financial crisis. As part of the incentive, there was an incentive for new first-time buyer. There was an incentive made for first-time buyer. It's possible that it's going to come back. I don't know, but we'll see.
Okay, thanks.
Next.
There's a question here regarding, would you recommend if you were going to stay, would you recommend buying if you were to live 4 to 5 years?
If you are not sure you're going to stay in Silicon Valley for at least 3 to 5 years, don't buy because it's too risky. But if you are not sure about it, there is always an option that if you buy, but you don't have to sell. So if you stay for Silicon Valley for at least 3 to 5 years, and even if you're going to leave Silicon Valley and you do not have to sell, then yes. But if you're sure you're going to have to sell, then I would say I'll be very careful about it.
Okay, and then has the inventory for single-family homes changed substantially?
Of course, it changed substantially, but I do expect a lot of inventory to come back this month and next month. Okay, so all this pent demand, pent supply that was basically suppressed since basically March timeframe, I believe would be added to the typical sale that is happening in the summer, and we're going to see relatively higher inventory level that we have seen if it would be a normal year. And on top of that, on the demand side, because a lot of people would not be traveling this year, we're going to see also a higher demand, in my belief. Next.
We have a question here from Joseph. What is your opinion about San Jose downtown condo market?
I love downtown San Jose. I hate condos because condos have HOA and it's expensive, restrictive, and it doesn't have an upside because one of the things that I like in owning a single family home is the upside that you have with improvement and extension, which is not available when you have an HOA guiding you. But on the flip side of that, if you cannot buy a single family home, or you don't want a garden or whatever, and you don't buy it and you buy it primarily as a resident solution versus also as a potential appreciation, then it's an okay. Because, for instance, let me give you an example. I know that a single family home in Palo Alto costs somewhere between $2.5 to $3.5 million, kind of the entry level of the market. And if being in the Palo Alto school district is critical for you, but you cannot afford $2.5 to $3.5 million, so buy a condominium townhome. At least you will be able to participate and send your kids to the local schools. But there are restrictions. So it depends on what are the things that are important to you, what are the factors that are impacting your decision. Next.
That's the end of all the chat questions.
So, ladies and gentlemen, thank you very much for your time. Please send us in the chat your email address so we can send you the URL to the presentation. I also would appreciate very much so if you can spend 5 minutes and write a review on Yelp, LinkedIn, or Google. I would really appreciate that. And we, the Urban Group, is here to help you resolve those questions and guide you through the maze of buying a home in Silicon Valley, selling a home in Silicon Valley, and investing in income-producing properties across the country. Thank you very much. Really appreciate it. Make sure you stay healthy and happy, and all the best. Any other question, Asaf? I see some question coming up. Anything else?
Something real quick, Avi. I realize you're quite invested in other areas of the country, and you've been focusing on the Valley in this prezzo. But any thoughts about those local markets outside of the Valley?
Absolutely. And I would like to encourage you to come to our presentation next Sunday, where there is a segment which are basically addressing investing in Silicon Valley real estate. Okay, just to give you a little bit more detailed answer. For years, I have not invested in Silicon Valley real income-producing properties, but about 3 years ago plus, we started going back to investing in Silicon Valley for income-producing properties. And in our presentation next Sunday, I'm giving about 10 reasons why to invest, if not more. What are the reasons that I've changed my mind, and what are the considerations that I suggest you look into if they're applicable to you, to make sure that you want to go back into investing in Silicon Valley real estate as an investor versus owner occupied.
How do we register for the next Sunday webinar?
It's
Is it on the website?
It's on the website, and we're going to also send you an invitation as well.
Got it. Thanks.
Yeah, this is Prabhu. Do you have any seminars on out-of-state real estate investment?
Out of state? So the presentation next Sunday will be about introduction to real estate investing in general. And we have segments that are addressing investing in Silicon Valley as well as outside of Silicon Valley. We talk about both areas, outside of Silicon Valley and in. Matter of fact, the majority of our holding, we are basically what we call second level property management. Most of them are outside of Silicon Valley. In the recent year, we purchased, I think, something like 13, 14, or 15 homes as investment properties in Silicon Valley. That is the trend that I was referring to, and that basically depends on what are your investment objective, which we discussed in this presentation.
Okay, thanks, Avi.
Last question.
Do you expect this time around will be worse than 2008?
There is a lot of belief that the current crisis is much more significant than the one that we had in financial crisis 2007 and 2001, because its implication is much more severe and it's globally versus the two other one which were much more narrower. At the same time, I don't know the answer to that, okay? It's a belief, okay? At the same time, I also believe that Silicon Valley will be the big beneficiary of the new normal, okay? These are the two beliefs that I have. What will actually happen in the future, I do not know. But this is the belief that I am operating under. And what I also am doing, I'm not married to these beliefs. I am constantly monitoring the market and trying to understand what's going on and change my opinion or my action based on the reality. Was that an okay answer?
Yes, thank you.
Okay, ladies and gentlemen, many, many thanks for your time. If you have the time, please write some reviews. I would appreciate that. Please be in touch. Send us your email so we can send you the URL and some other material. Wishing you a healthy and happy shelter in place and good fortune in the future. Thank you very much. Goodbye, everyone.